Hello, Tiernauts, and welcome to this daily market commentary for Tuesday, the 23rd of July, 2019. I think it's fair to say Monday was about as dull as markets can get. Thankfully, Tuesday will be a little more entertaining. As I sat down earlier, Bitcoin was starting to break lower below the 10,000 level, and ETH had slipped down to around 210. In fact, it's a sea of red across the crypto market to start the day. The attempts to move higher over the weekend, Bitcoin over 11,000 and Ethereum above the 235, 236 level have been thwarted, and now we have some downside pressure, more technical probably than anything else. However, the move is rather short-lived, and we return back to opening levels and kind of sit there pretty much the rest of the day around 10,150 and 214 respectively. On a positive note, I see US brokerage giant TD Ameritrade is now offering BTC futures trading. Going to be interesting to see if they comment on any early demand for that product, as that was something which I think the market was looking for, was easier access for retail traders to be able to trade Bitcoin and other major coins. So moving on to FX, the day begins with the dollar really in charge, I guess. Euro dollar had initially slipped to interim support around 111.80, and sterling had continued yesterday's downward momentum, hitting an initial low of 124.18, and Aussie had gone back down to 70.15. Sterling has to have a little bit of a bounce before the winner of the Conservative Party leadership race is announced, heading back up to 124.65, and then the big fanfare with announcement that Boris Johnson would be the new leader of the Conservative Party in the UK, and with that, obviously, he would also become Prime Minister. Not really unexpected, but the market was waiting for confirmation. Quick rally up to 124.80 for cable, but once again, side ahead lower as the dollar rally continued really across the board. Euro ended up going just below 111.50, and Aussie went back down to 70 cents. Dollar CAD up to 131.64 for a high. US equities had started off fairly positively, with the Dow Jones up 120 points, building on some robust gains in Europe, where the DAX index in Germany had closed up around about 2% on the day. However, a downgrade of global economic growth by the IMF, coupled with some weaker than expected US housing data, sees much of those gains given back. However, that was not the end of the story. Some headlines that the US and China are to meet next week for in-person trade talks send equities actually to the highs of the day, with the Dow Jones closing up 177 points, gold back below 1420, and the US 10-year yield creeping back up to around 208. The only real effect on FX was for dollar yen to move a little higher up to its high of the day of around 108.28. So, a technical analysis. I wanted to focus on something I haven't really mentioned so much in my commentary before. Looking at Euro Swiss, it's a pair, as I said, I've not really touched on too much before, maybe because of the nightmares are still fresh from 2015 in my mind. But all joking aside, the past couple of months has seen the Swiss strengthen to its highest levels in over a year, and today's break of the psychologically important 110 level has taken us to the highest the Swiss has been in over, or the Swiss franc has been against the euro in over a year. I'm sure that break will not have gone unnoticed at the SNB, or the Swiss National Bank. This is where it can get dangerous again. The ECB is clearly lining up for more quantitative easing, thus putting this cross under a certain amount of pressure. So how will the SNB react? Well, you've got a number of things they could do. They could cut rates further in Switzerland, keeping in mind they already have negative interest rates there in the first place. They could intervene again to try and weaken the Swiss franc, but think it's fair to say that past experience of doing that didn't end particularly well, or they could just sit there and hope, none of which really excite me very much. So I think a lot of traders have probably avoided this pair for rather obvious reasons over the last couple of years. But there is no doubt still plenty of interest and no doubt plenty of money wanting to test the SMB's resolve. So from this daily chart here, having just broken 110, we can see we have some support now coming in around 106.30. That line is down the bottom there, and then more sort of major support coming in around 102.35. And then obviously beyond that, there's a bit of a vacuum down to the lows we saw in very early 2015, which will depend a great deal on where you are putting your chart data from, but certainly well below parity, and in some cases down as low almost as 0.75, believe it or not, I think traded. So just want to keep an eye on. The break here is significant, and a 110 it certainly will have caught some people's eyes. So just keep an eye out for it, because it's behaved fairly well over the last year or so without too many particularly sharp moves. But I'm sure speculation will start to increase, based more probably on euro weakness than Swiss strength probably at this point. But just be in mind, support levels down there are few and far between, and obviously any rally to the top side. Well, the big picture, you can see here what was once the line in the sand for the Swiss National Bank at 120 became a rather resilient high on the bounce we had back up again. So just some food for thought on a pair that maybe you haven't looked at so much. And on that note, I shall call it a day. Wish you all the very best of luck, and look forward to chatting with you tomorrow. Cheers.